Hello, guys. Welcome back to our podcast. Today, we have invited the head research of CryptoQuant, Julio, with us, and we're going to talk about the recent report they have launched, they have released. We're going to talk about Bitcoin halving, and also we're going to talk about the changes post the Ethereum upgrade. So I have been studying the reports you sent me last night. So I've seen your latest report you have using the unprecedented Bitcoin demand. This word. It's quite remarkable
Yeah.
actually, because last few days I have interviewed some founders in layer one and layer two, and they will feel like this year that the choose of Bitcoin is not like a question, because last year they got asked a lot why you choose Bitcoin, but this year it's like obvious choice. So tell us more about this.
Yes, exactly. Yes, basically since I would say October last year, we started to see like a really fast growth in Bitcoin demand. And of course, this year it increased faster because of the ETF approvals in the USA.
Yes.
And we are picking this up using our data and a new tool that we launched recently. It's called the cohort tool, because we are able to really dive into specific characteristics of Bitcoin addresses or Bitcoin holders. And in this case, to assess demand, we are looking at addresses that only accumulate Bitcoin. They only purchase Bitcoin and accumulate, and they never sell. They never transfer Bitcoin. So we're looking at the balance of these addresses to assess demand, right? And so basically, since 2020 to 2022, the growth of the balance of these addresses oscillated between, at maximum 40,000 Bitcoin a month. That was like the demand for this set of addresses, right? But starting in 2024, this year, this growth has increased to 200,000 Bitcoin. So it's a jump from 40. Yeah, it's a jump from 40,000 Bitcoin monthly for this type of holders to 200,000 Bitcoin monthly being accumulated in this type of addresses that we are able to identify using this cohort tool. And of course, a lot of this has to do with the ETFs that they are buying a lot of Bitcoin, the US ETFs. But also not just that. Recently, also we've seen this outside the ETFs. Also, this type of addresses, this type of holders, also increasing their holdings of Bitcoin, the demand for Bitcoin, and it has increased to unprecedented levels. Basically, that I don't think anyone expected. And so it's really above expectations, and that's one of the reasons I think that's why we're seeing this price action also, because of this huge demand for Bitcoin so far this year.
Yes. So because I also noticed that you mentioned the supply side of this equation. So you show some worries about the supply side, because it's remind me that the author have the article says about the ETF, and he also elaborated that because ETF, a lot of people buy them for value saving, so there won't be like enough Bitcoin for circulations, so there won't be enough incentive for miners. So what do you think about the connection between those two?
The connection between what? Sorry?
The connection between the launch of ETF, the people buy a lot of ETF for value saving, and they will affect the incentive of miners in the future. I mean, in the long term, like.
Incentives in what way? I don't follow. Incentives in what way? Just
well, I think he means that because a lot of there won't be enough Bitcoin for circulation. So
yeah. I see. Yes, exactly. Yes, actually, yeah, we talk about this. We estimate, how much Bitcoin is out there ready available to be purchased, right? Some of these Bitcoin are, as you say, like are in miners, right? Miners hold a lot of Bitcoin, right? But also there's Bitcoin on exchanges or Bitcoin on certain entities like the U.S. government that is also selling, right? So that's available as a supply. And then we also estimate Bitcoin on OTC desks, like so we have the inventory. Let's call that like the inventory of Bitcoin that is ready available to purchase if you want, right? And so that has also been declining over the years, mostly because Bitcoin on exchanges is decreasing the balance of Bitcoin on exchanges. So right now it's around 2.4 million Bitcoin for all these entities. But with the demand growing as it is growing so far this year, the amount of Bitcoin ready available for purchase in these entities, um, as relative to demand, so it has come down from around, let's say, maybe like 50 months of supplies of demand is in there, right? It was there, but right now it's around 12 months, just 12 months of demand, right? Because this huge demand pool that we've seen so far this year has decreased that available quantity of Bitcoin in terms of demand, right? And so it's almost it's the lowest it has been historically, and just covers like 12 months of demand. So I'm not saying that it will go to zero, right? Because there's always, when price increase, there's always more Bitcoin that comes to circulation because, the holders, some of them will say, okay, I want to sell at this high price, right? And we see that all the time. But the interesting thing is to see this metric is it tells you how much tight the market is, given the inventories and the demand, how it's growing. So that's what this metric tells you. And we you could say like we're running out of Bitcoin, and it's the lowest that it's ever been.
Yeah, but I think Bitcoin is supposed to be like running out. We were running out of Bitcoin like eventually, right? So it's not because I recently, it's funny thing, I have been reading the white paper of Bitcoin, and I noticed that in the future, in the beginning, it's never been like an investment product. It's not designed to be investment product. So let's derivative, don't derivative. So do you think there is any like solutions? What's your perspective about this effective solutions to this situation?
To the situation of lower inventories.
Yes.
I mean, it's always like that in the cycles, right? We're in a part of the cycle in which there's a lot of demand, right? And so of course Bitcoin is scarce, and a lot of people hold the Bitcoin because they know that is valuable, right? And so we get this demand outstripping the supply that is available for purchase, and of course we get the high price increases, and we get to the bull run, right? And then to the top. But as we increase, as we see the price increase, a lot of the holders, especially long-term holders, people that are holding Bitcoin, for more than a year or maybe more, right? They start to sell. So the Bitcoin becomes available to the market, right? It's only a matter of at what price would more Bitcoin come to the market, right? That's what we've seen on the cycles. Like the price starts to increase and it gets really tight, and that's how we get the bull runs. But then eventually, these long-term holders will sell part of their holdings, and the Bitcoin will be ready available for the market, right? This is how we get like more Bitcoin circulating. But the question is, at which price, right? Is this Bitcoin gonna come to be available on this cycle?
Yeah, because now I feel like the price is really high. So nobody have, because a lot of my friends told me nobody have been expected it to be that high. and also they're not expecting the bull market had lasted that long. So that everybody was like so formal about it.
Yeah, definitely. I don't think anyone expected to have a fresh all-time high before the halving, right? It had never happened before. We never had an all-time high, a fresh all-time high before the halving, and we did this year. But again, I mean, for me, this year is a story about the unprecedented demand. It's just what it is for me. And also demand above expectations, anyone's expectations. So that's why we got to the fresh all-time high before the halving, right? And in terms of the time, I mean, looking at on-chain metrics, which what we do in CryptoQuant. uh they tell you like spending patterns of long-term holders tell you like we are not really on near the end of the bull market. Or if you look at some valuation metrics, they tell you like, okay, we are not really near the end. We are basically at the middle, you could say, right? So how high we go, I mean, that's another question. But in terms of the timing, it looks like we still have some room to go.
Yeah. So you mentioned your team. So well, can you give us a more detailed introduction about the CryptoQuant team and what your work is mainly about? Yeah.
Yeah, sure. So I'm the head of the research at CryptoQuant. CryptoQuant is on-chain data provider and also on-chain research provider. And so basically what we do is extract all the information that is on blockchains, like the Bitcoin blockchain generates a lot of information about transactions, about how many transfers of Bitcoin, about who is holding the Bitcoins, where the Bitcoin is going, right? Who's selling, who's buying. So all that is generated on the Bitcoin blockchain, right? But so we extract that data and we transform that data, clean that data in a way that we can get, really clear insights on the data that can tell you, where we are in the cycle. Are we in the bull, in the bear? How much, that those type of questions that can really help you on our clients' investment decisions. So a lot of our clients are hedge funds, are traders that use that data, to inform their trading decisions. That's what we do. We provide the data, and also we provide some research, some analysis, which is what I mostly do, the research and the analysis that is published for, in general for the public, but also for our clients. And so to help, navigate all this world of on-chain data and analytics.
Okay. So your prediction, when you do predictions, like you still feel like the most difficult thing for you to deal as like I mean, what's the most difficult situation for you if you have to do predictions and the price predictions and the whole industry?
Yeah. So yeah, the most difficult. Yeah, price is difficult to predict. Of course, we look more than we doing predictions or forecast. What we can really deliver is meaningful metrics that will tell you when the price is too high or too low, or when to manage risk, market risk, when is a correction could be coming, or when is a good time to maybe add to some position. And so this type of the metrics that we do and the analysis more is really more for like risk management, right? And to know what's happening on the market, what's happening on chain. That it tells you really a good story of what's happening, and so you can act on that. So yeah, more than prediction, I would say like it's more about in crypto it's more about risk management, right?
Yeah.
And so because it can, there's also like events that could happen, like an FTX, or some stable coin, or some fund could blow up. So So it's more about being aware of, okay, where's the risk and how can I, and our clients do that a lot, like how can I manage that? That's really important. One of the things that they use a lot, our clients, and of the data is the flows of Bitcoin or other coins going to exchanges, when there's a lot of coins going into exchanges. So that can mean risk, market risk. A lot of people are going to sell, or what's going to happen, right? So it's more about, I would say, about risk management and knowing like what's happening, and get ahead of those type of events.
Yeah, I feel like that's really important. And also, I see that your report mentioned actually it's very detailed, like analyze about the how the Bitcoin halving is affected the miners. So not all our like audience are finance people or miners. So they may be new to the industry. So could you give us a elaborate about how this happened?
Yeah. So about the halvening. So first of all, for people that don't know or not really familiar with that, so the halving is, an event that happens on the Bitcoin network approximately every 4 years. So the first one was in 2012, then 2016, 2020, and now we're gonna have this next halving in April 20, around April 20 this year. So what happens there is that um, the block reward. So the miners are mining these blocks, right, and ordering the transactions of Bitcoin. And when they do that, they get a reward every block, right? Every block that they mine, they get a reward. This reward is new Bitcoin that is issued. They get paid with new Bitcoin, and also fees, transaction fees. So the new Bitcoin that is being issued each block will decrease, will be cut in half every halving, right? So for example, right now the miners are receiving 6.25 Bitcoin per block, right? So after April 20, that amount will be cut in half to 3.125 Bitcoin. So the miners are getting, after the halving, less lower payment for mining blocks, right? So that's what it will happen. And so that this means like less revenue for them, less revenue in terms of Bitcoin for the miners. And so of course, if you're a miner, you're getting half of the revenue, but your costs are the same, right? So the less efficient miners, the miners that have higher mining costs will be really they will financially they will be hit, right, because they are receiving less revenue. And so this is a game of really having a low mining cost, so you can sustain, keep producing, keep mining Bitcoin, even if your revenues are being basically cut in half, right? And so that's what will happen in about 2 weeks. And some of these miners will, the less efficient, will certainly have to, curtail production. So the less efficient ones, right? But now there's a lot of miners that are like big companies, really big companies. Those are like more efficient miners. Most of them are in the US. And so they have like lower, I would say, lower production costs, and so they will keep operating. But other less efficient miners certainly, or maybe like individual people that mine also, they will have to maybe cut and stop mining Bitcoin because of the halving, because the revenues are going to decrease by half, basically. After that.
Yes. So I have a theory, though I don't know if it's right, but I feel like in the long term at Bitcoin ecosystems, that the mining incentive is not gonna last very long. So the truly incentive of miners should be the transaction phase. So there will need the ecosystem to be really active and the need all the applications on chain is like has actual users. So has actually for me it's like bring the higher demand of the ecosystem. What do you think?
Yes, definitely. I mean, yes, as the block subsidy, the issuance of new Bitcoin decreases, fees are transaction fees become a more important portion of the payment to miners, right? What we have seen is that what happens is that the amount of the fees in terms of amount of Bitcoin. I mean, there's sometimes they spike like really high, right? But in general, right now they're really low. But what happens, or what has happened historically after halvings, is that we get this bull run, right? This price increase. So the fees and in general the revenues of miners increase in US dollar terms, for example. So even if they are receiving like less Bitcoin from the block reward, and fees don't increase too much, they're receiving like more revenue in US dollar terms, right? So I think that after the halving, it's a matter of being a really low cost Bitcoin miner, endure that. Those it's gonna be like historically there has been like a few months after the halving in which prices don't increase a lot, so endure that period, and then as prices have increased, miners receive like more revenue in terms of US dollar, even if in terms of Bitcoin is less, in terms of US dollars is more, and so their costs are in US dollars, so or in fiat, so that compensates that. But yeah, on the long term, miners are gonna survive in but just in fees, right? That's the way it will be, because the block subsidy goes to zero. It tends to zero, and it will be zero at some point. But fees will be will be the only way to get revenue mining. And so I think I mean the good thing about fees on the Bitcoin network is that a market for fees develops. It has been developing. Like, okay, if miners don't get enough from the block reward, then they will ask for more, on in fees, right? So it's like a this game in which, okay, miners can also say, I will not mine fee transactions that have very little fees, right? So it's a game of, okay, if there's too much demand for Bitcoin, then they can for transactions, right, for block space, they can ask for a higher fee, right? And so that will also feel this that game is gonna develop, and that market for fees is gonna develop as we get less reward from issuance, and depend more on just the transaction fees.
Yes, yes. So, speak of the ecosystem. I don't know if you guys still are also working on like some specific projects, or some specific layer one, layer two projects. So, do you like what's your innovation about the Bitcoin ecosystem? So, do you have noticed any really cool and interesting narratives lately?
Mhm.
Or you think, or you can just say it's so boring. So nothing is like.
Well, actually, yeah, yeah, actually, let's call it like, um, before probably last year, it was like, let's say boring. Let's say boring, right? Because it was, I mean, Bitcoin is most of all, I see it like this. It's a savings technology. It's an asset that is scarce and is valuable. Because it has demand for to store value. So that's one thing, right? And that's really important. I mean, at least personally, I see it like this. But yeah, you can say like, okay, but is there any other things that we can do with this, right? And I would say, I mean, uh, in general, all the fun stuff was in other chains, like in Ethereum, right? With, you know, DeFi or NFTs or DEXs or a lot of those old things. But since 2023, a little bit of that has come to Bitcoin, right? So, for example, in 2023, we saw the emergence of inscriptions and ordinals, and so BRC20 tokens. So these are like, for example, inscriptions is like NFTs, but now NFTs on Bitcoin. So the NFT is issued or created directly on the Bitcoin blockchain on the layer 1, right? So that had that got a lot of attention last year. There's a lot of like collections, these inscription collections that got really popular. They were selling for thousands of dollars for some of those. So we're seeing like some of that activity coming into Bitcoin, right? In 2023 we saw that. BRC20 tokens is like just this like ERC20 tokens that exist on Ethereum. BRC is because they're issued also on the layer 1 of Bitcoin. So these are like mostly they're like meme tokens, right? But they have grown also a lot in terms of value. There's some BRC20 that the value has the market value has come into like the billions of dollars, right? For the largest one. So that's also something that has happened. And I mean, I wouldn't say like it started this year, but certainly this year the layer 2s for Bitcoin are showing like a lot of growth and more activity, more developer activity, and also more like market activity. And so, for example, you have some layer 2s that are market cap of 4 billion like stacks, and these are more for DeFi. So bringing like DeFi into Bitcoin, but through layer 2s. And also they have like all this kind of lending and borrowing and decentralized exchanges. So I would say like let's say like it is become more fun, right? Since 2023, right? I mean, there's different opinions on that, but yeah, some like the way I see it is like some of the characteristics that we only see those on other networks like Ethereum or other layer 1s. They are now being coming into Bitcoin, and so I mean there's more, certainly there's more like transaction activity on the network because of that, right? And more demand for the asset because layer 2s use the asset, right? So I mean, it's in general that has happened, and we've seen more network activity on Bitcoin because of those use cases.
Yes. Yeah, I feel like that the DeFi projects is really like moving to Bitcoin ecosystems. But personally, actually, I don't like any DeFi like projects, but just the personal opinions. Yes. So,
Yes,
but
exactly. Yeah.
I do agree that DeFi is the only practice in blockchain with blockchain technology to take the practice from 0 to 1. I think that is the only practice right now. So it's better for any chains to scale up. So do you think that for developers, so Bitcoin and maybe other layer 1, maybe Ethereum, they can what things they can done differently? So because those are two different ecosystems, the what kind of the projects, the programs they should done differently when they choose in layer 1.
So you mean Ethereum? What Ethereum could have done differently? Is that the question?
If I'm a developer, I need to do comparisons if I want to build up
Oh, okay.
applications. So what is the advantage of Bitcoin?
Yeah, I mean, I think that for these layer 2s that are being built on Bitcoin, what they want is to be on they see it like Bitcoin is, first of all, the asset is unique. I mean, they do see this like, okay, we're building this layer 2, and we use Bitcoin to bootstrap this layer 2. So we're using like the best asset, the best digital asset that is out there, right? So that's one, like, okay. And then second is like, okay, the network itself is also like the most robust, secure network. And right, so I think those two characteristics really really appeal to people that want to build some value on top of that, right? Mm-hmm. You build some value on top of the best asset, the most secure, most robust network. So that's really the value that they see. And also, there were some, I'm not too technical, but there were some changes to the protocol that allow it to do this. There was some changes on the protocol, like Taproot, although this wasn't, they weren't expecting this, but with that change, you could do like the inscriptions, you could do like the BRC20s, and for the other layer twos that use the want to do the DeFi, I think that the most important thing is that they're building this layer two, which they think will have a lot of value. They're building it on top of the best, most robust and secure network, and working with the best asset, right? So I think that's the value that they see.
So the BRC20 that you just mentioned multiple times. So I asked a lot lately because people ask me that the Western people, they don't like BRC20s, but Asian people, especially Chinese, they're so crazy about it. So what do you think? Why do you think make these differences? Their attitude.
Yes. I mean, in general, what I've seen since I have been on the industry is that, Asia in general, Asia is more open to, altcoins, or, they're just more open to that. They want to experiment more. There's more like GameFi, in Asia. There's more of that activity, right? So, and now if you have these BRC20 tokens, right, it's natural that they will, the Asia is gonna be like all over that. It's gonna be really appealing to that, because they it's just like the way people are, like the preference, right? I if I had to say that in the West, right, or in the US, Europe, I think they adopted Bitcoin more from the monetary standpoint, right? From the idea that this is the new money, the new reserve currency, so the asset, the asset, the best asset for store of value. So it's just I think it's more the vision, right? The vision was that from the beginning, and I guess in Asia, they really don't, not in Asia, they're more open to like this. I mean, experiment with more things, right? I guess, and we see this in the data, right? Like trading volumes or altcoins are, the largest is on Asia, right? Korea, Japan, so I think it's just a matter of preference, and BRC20s, they are like right now, as far as I know, it's just meme coins, right? There's no really a use for BRC20s. It's just memes. It's just fun, and so I guess it's appeals to the Asian market.
Do you think that because Asian people like to speculation, like more?
Yeah. I mean, look, CryptoQuant is a South Korean company, right? So a lot of my coworkers, they're living in South Korea. They're South Koreans, and I mean, they tell me that, like, South Koreans in general, they're degens. They like altcoins. They like to speculate. And also I think there's some of that has to do with regulations, right? Because there's more like capital controls, I guess, in those countries, and so this is a way to be exposed to this other type of assets, more risky assets.
Yes, yes. So I think we are talking enough for Bitcoin halving today. So let's turn to another topic. The Ethereum upgrades. So I have saw you also released a report regarding this. So could you give us like a summary of the what do you think the change is meet the other people's expectations, and what are just not that good?
Yeah. So you're referring to the latest upgrade on Ethereum, right?
Yeah.
The Dencun
Yes,
Dencun upgrade. Yes, exactly. So yeah, that happened. I think a few weeks ago. Um, it was the upgrade is related to making available some space to store more data, right? So if you want to inscribe like more data in a block, there's now like a space for that. Um, and so what they wanted with this is to reduce the fees, the transaction fees, by giving like more space for this certain type of transactions, especially layer twos also. Um, so what we saw, I mean, as this was upgraded, is a a really large decrease in transaction fees, in Ethereum, but also in layer twos of Ethereum. Um, so that's I think that I mean that was the goal, and what we saw is that was what's happened is like there's like now lower transaction fees, and this is especially important for the layer twos that are designed more for have higher throughput of transactions. So this is really important, and also because of the use cases of Ethereum, of these layer twos, like you know like DeFi or those type of transactions, or that it's better to have like lower transaction fees. So that's I think that's what they accomplished with this recent upgrade.
Okay. So you have said that there are significant decline in ETH supply. So do you think this is like a sustainable of this trend?
The decrease in supply of Ethereum, right?
Of
Yes, yes. Well, this is how it is designed since they made also an upgrade. I think it was in 2022. Yeah, 2022, the merge. So yeah, so the thing is that they move it from proof of work to proof of stake, right? So there's the rewards decreased, but also they are, as part of this upgrade, they're burning transaction fees, right? So whenever there's a lot of activity on the Ethereum network, like a lot of transactions, and fees like spike, and there's a lot of fees generated, those fees get burned, right? So basically, those fees, the amount of fees that gets burned, it's supply that is gone forever. And as long as these transaction fees are higher than the reward that the validators get, so their supply will decrease. So the question if this is sustainable or not, I mean, it depends on entirely on the activity on the network of Ethereum. So as long as you get more use of Ethereum, you get more transactions, right? And fees increase, or overall fees um, increase, then you will get this effect of lower supply from Ethereum, and we've seen actually that since basically since they did this upgrade, and just for a few moments it hasn't been the case, but mostly it has been decreasing the supply of Ethereum slightly, but decreasing. So it has become um, like a deflationary asset, right? And so yeah, that is what was the result of this upgrade and moving to proof of stake.
Yes. So as if you as a developer, so what do you think the this upgrade has failed to achieve? So what you think it's not like meets your expectations this time?
The upgrade, I mean, I think it met the expectations. I mean, because they switched to proof of stake because, I mean, the first reason it was like they wanted to move to a consensus mechanism that doesn't spend too much electricity, right? Like proof of work involves spending electricity to mine, but so they changed to proof of stake because of that. But they also wanted to make Ethereum deflationary, and I think that this was more related to compete with Bitcoin, right? So have a monetary policy that is, um, let's say, like better than Bitcoin monetary policy. So they wanted to do to launch this narrative like, oh, Ethereum is now like you know more deflationary than Bitcoin is, right? Bitcoin is a little bit inflationary right now, and Ethereum is not. It's like we're getting less and less supply, and so that I think they wanted to get the store of value use case out of competing for that with Bitcoin. I mean, in terms of what has happened, that really was the case. Like Ethereum supply is decreasing, so it's deflationary. But I don't think that. I mean, no one really sees like Ethereum really competing for the store of value with Bitcoin, right? I think Bitcoin has really well established, you know, winner in terms of that, right? For the market, like, okay, this is the store of value. This is the asset that is, scarce. Yeah. So in that sense, I would say like, okay, I mean, it really didn't happen, but on in terms of the data, yeah, the, the supply is decreasing, so they did that, right? But I don't think that like the market really care much about that, because you can see like, okay, the price of Ethereum is underperforming Bitcoin since that actually since the merge happened. It has been declining in terms of Bitcoin, the price of Ethereum. So yeah, it's a depends on how you want to see it. But yeah.
So you think why the price declines? So do you think because of the confidence, the people's attitude towards the Ethereum ETH and different attitude? Why?
Yeah, so I think it's I mean, this year is basically because, I mean, Bitcoin has too much demand. You know, with the ETFs, the demand for Bitcoin is too strong. It's growing too much. I mean, not too much, but it's growing really really fast. And so that that has really played out to on the margin, relative, the demand of Bitcoin is much more now than for Ethereum, right? Especially for investment purposes, right? And so that is reflected in price, I think. So that's why we have seen since basically the last 2 years, or since 2023, the price of Ethereum going on downward trend, in terms of Bitcoin, right? The relative price, Ethereum is underperforming, and so one of the reasons for sure is like the demand for Bitcoin is just growing really aggressively, and especially for you can have demand for different use cases, right? Okay, you can have demand for I want that asset, but for transactional purposes, right? But for Bitcoin is and demand for investment purposes, right? So it's demand, spot demand to hold that asset, so it makes it more scarce, right? And so there's a lot of that for Bitcoin that Ethereum doesn't really have right now, and hasn't have, for the years. And so that's why I think mostly Ethereum is underperforming Bitcoin, because everybody's focusing on Bitcoin right now. All so far this year, and maybe since late last year, it's all about Bitcoin. And this is what we get, like, from, for example, media outlets ask us for, analysis, or they ask us for our opinion on some certain topics, right? But since, I would say, late last year, it's all about Bitcoin. People just are talking about Bitcoin, right? And so that reflects, like, okay, the market is just focused on Bitcoin, and then it seems like there's nothing else. And so that's why, more demand for Bitcoin, and price, Bitcoin outperforms Ethereum.
Okay. So regarding this Dencun upgrade, so do you have anything, because we are at the end of our podcast, so do you have anything specific and you want to free share with us? So is there anything interesting that you want to mention?
For Ethereum, or in general?
For this Dencun upgrade.
Oh, then I think that, it was a successful upgrade. It's a. I'm not too technical, but it was just an upgrade to increase, the amount of data that you can include on transactions, and it was successful in that way, and really decreased fees. So it was a successful upgrade. But I don't think that, on the big picture of, especially on the investment side, it changed a lot, right? Particularly for Ethereum. So it was like, compared to other upgrades like the merge, for example, I would say it was like a small upgrade, right? And so it didn't, right, really change the narrative towards Ethereum, like we have seen for Bitcoin. Like, the narrative is all about Bitcoin right now.
Yes. So because a lot of people are saying that the ETF is gonna fail to pass. So what do you think?
Yeah, exactly. Yes, exactly. I'm not an expert on that process, but I do, read and follow people that really know about that. And then, yeah, so the probability of Ethereum spot ETF being approved is really, like, really low. They say, like, it's really low. So I don't think, and they don't think that we will have that, this year, for example. So yeah, that also adds to the, Ethereum is not able to grab, like, the narrative, right? To change the narrative into Ethereum, right? And so, yeah, and also for Bitcoin, like, we start to hear, like, okay, ETFs maybe next in Hong Kong, right? So there's more, like, talk about other ETFs for Bitcoin. And so we got that, like, on Hong Kong, or in, Europe. So there's more talk about that, really, about Bitcoin rather than, Ethereum in that sense.
Yes. So the in Hong Kong, actually, other than ETF, I think the stable coin is like a really hot narratives too.
Mm-hmm.
Because the government
Yes.
is really pushing this thing. They're really pushing
Mm-hmm.
this thing. So, but we also interviewed another stable coin project in Sina. So
Uh-huh.
yeah. But they don't call themselves stable coin anymore. So they call themselves
Yeah.
synthetic dollar particle.
Synthetic. Yes,
Complicated.
exactly.
So what do
Uh-huh.
you think? What do you think of this narrative, the stable coin?
You mean about Athena? Um,
I mean about in general. So
yeah, stablecoins are, a really important part of the industry, right? In terms of liquidity, in terms of, trading pairs, for trading, like, it's really important, the stable coins. And so, but also we have like the largest stable coins are centralized, right? Because they are companies, they are like they have their dollars in banks, and so there's always this risk of regulations, or risk of that the dollars are not accessible. So there's all kind of risks with these stable coins, whether they are operating by the book or not, right? But there's some risk because they are centralized by nature, right? And so I think that there's always, because of this, there's always have been the need of having a stable coin that is really not dependent on the legacy financial system, right? That is completely like outside the financial system. And so there has been like some attempts of over collateralized stable coins using cryptocurrencies, or some algorithmic stable coins, right? And now and since a few years ago, but especially now with Athena, that they want a stable coin that is completely like out of the traditional financial system, right? And that can scale, really scale using this other type of instruments. And so, I mean, I think that it's really, I mean, if they manage to do it on scale and do it properly, it's a really good, implementation, because then we have now like a stable coin that is really outside of the traditional financial system, right? So you have like the US dollar value, but it's not attached, at least in the same way that the other stable coins like Tether or USDC are attached to the legacy financial system, right? So this is like the newest, I would say, narrative. But also, I mean, it comes with some risks that need to be managed also. But I think that this is like, the it is a matter of iterations, right? In order to get this stable coin that is not not attached to the legacy financial system. That's what they're trying to do.
Yeah, but honestly, I just say it. I think the stablecoin under government's regulations pointless. I don't get it.
Yes, exactly. I mean, yes, exactly, because I mean it does work well, but yeah, I mean you're still using like the legacy financial system, and you are like, if the government wants, they can shoot you down, right? So it's not really like the crypto ethos, right? Because you're centralized, you're dependent on government regulations and legacy financial system, right? So that's why that the search for these other type of stable coins, always continuous and evolving.
Yes, yes. So I think it's enough for today's podcast. And thank you for your time, for coming join us. And
Yeah.
thank you guys for listening. If you have any comment, please leave in the commentary sections.
And
So
just really quick, I mean, if you want to get some on-chain data or learn about on-chain data and how you can use it for investment decisions, you can just go to CryptoQuant.com, and you can get our data and our analysis on our page. So, and thank you very much for
yes,
inviting us.
we are really good. Yeah. So thank you. Bye bye.
Bye.